take a look at where the market settled on this Thursday. Record high for the S&P. Congratulations, everybody. 2954 for the benchmark index, a 9-point improvement on the prior record close. Nasdaq back above 8,000 for the first time in a bit. The Dow now within 100 points of its record close. I think 26,825 is the exact number there. 828 is the exact closing high on the Dow. So we're within spitting distance of that. Just to put a number on where the Nasdaq's record close is, that's 8164. So a little bit more work to do for tech stocks, but we have the S&P back at record highs. We were discussing earlier, President Trump, of course, tweeting about the records. He is very excited. A lot of news going on that wouldn't necessarily be positive. We discussed the Iran situation earlier, but when you have the BOJ come out overnight and essentially reiterate what Powell said, which is that central banks around the world think they need to be easier than they've been, and that they haven't really been particularly restrictive. I think for risk assets like equities, it means you're off to the races.
Yeah, you start to think about, okay, what are going to be the catalysts to go further from here? Scott Gann was talking about some of the technical points that, the new intraday high now is 2956. It's funny that our closing high here matched our old intraday high. I think we got to start thinking about the summer and low volume, and that can actually lead to bigger moves. And when you're going up, it seems, as Andy said, 3,000, very close. We've got G20. And then, look, earnings aren't that far away. We have Netflix, middle of July. July 17th, I think we were just talking about
I should look at it, but
it comes quickly.
The 5th is a Friday, so I would guess that big banks are going to be the 12th.
You're right in it. So it's like G20, you've got that holiday week, basically, because of where July 4th is falling. You're going to have low volume in there, which is not necessarily a bad thing when you're chasing records. And then you're going into earnings season. I'm
not that optimistic, and I think we're going to have some fireworks before we get to this low volume complacency you're describing. And I don't think the G20 meeting, I don't think that's going to go well. I'm very skeptical.
You think a blow up?
I don't think it's not going to be a blow up. No, it's not going to be a blow up. But I don't think they're going to accomplish anything. And I think Trump is going to come out of that meeting trying to paint it as a very productive session, and we're going to continue negotiations. And markets have listened to Trump. I don't know why, because he has not been right generally. But I think that there's just going to be no progress on the trade talks with China, which means that sooner or later, and later could be a maximum of 90 days, we're going to get to Trump's next escalation move, which is, the new tariffs on $300 billion of consumer goods imported from China. I just think that's inevitable. And I don't know why markets are so complacent about that right now.